Thank you for tuning in to another edition of the VULCAN Report. This end-of-day report is for June the 28th, 2017, Wednesday. And basically what you're looking at really quick is the cryptocurrency space. You see here Ethereum, Bitcoin, and Litecoin. You can see that currently the Ethereum is up almost 12%. Bitcoin is up 0.09%, and Litecoin is up just over 5%. So these markets are really, roaring back, trying to rally off of their base lows, and that's a good thing. Yesterday, the Ethereum got as low as $211, and that's pretty darn low. Now we're back to $321, so we've rallied just over $100 from that support low. As you can see here, the markets have put an end to that downtrend and have now gotten back into a bullish pattern. If we take a look at what happened to the Veritasium, see, last check it was up just over 8%. Let's see where we are now. All right, let's see. So far, incredible, enormous rally in the Ethereum. It rallied all the way up to 29. All right, 20. That's 29 times the ethos or ETH for the Ethereum, which is incredible. So the potential for this particular market is enormous. All right, it's enormous. But you can also see this incredible volatility, how it gets up to these enormous levels, and then we get all the way back down to 0.2589. All right, so not a lot to say about that. It goes like gangbusters, and then it just collapses. What are you gonna do? There's nothing you can do about that except for wait for this thing to really get on and popping, and then hopefully, this thing will be noticed by more exchanges, and perhaps, you'll get a lot more smoother pricing because you have more volume, more players in there. So this one has enormous potential, But come back here, you can see that the Ethereum is in the lead here with $1.47 billion worth of money exchanging hands here. Trading volume, Bitcoin is second at 476.79 million, and Litecoin's at 303.96 million. So pretty decent day for volume in the crypto space. All right, now let's take a look at the markets and see what rears itself in Goshen. A city or treason? But you can't tell what movie that's from. One of my favorites. That's from the Ten Commandments, the original joint. With the guy, what's his name? He passed away now. He was like the spokesman for the NRA. You know what I'm talking about. He played Moses in the movie. Anyway, moving on. All right, so let's see. You're looking at gold. You can see here that we're trying to rally off of this right here, just like I explained that the market's going to try to do. It's going to have to get up and over this resistance point here. And if it can do that, if we got a nice steep ramp, to catapult gold back up to the 1300 level. So the only thing to overcome now is this side here. You see on the weekly stiff downtrend channel. Let me just blow this up for you a little bit in a bigger screen if my computer will act right. All right. So you can see basically it's trying to stair-step its way up. Lower lows. I should say higher lows. I'm sorry, I said lower lows. Higher lows. And here you go. 1, 2, 3. And it's the fourth base So we should really be way up into the stratosphere by now. This pointer is the magnet where price wants to go here. And on the weekly, it's fighting to gain back momentum. Just need to close above 1257 this week, and this thing can get, you know, back ripping and roaring again. So things are starting to look up for gold right now. Let's take a look at silver real quick. All right, silver is starting to have a similar price pattern as gold right now. Not as well defined, but we do have higher lows here, all right? 3 basis points right here. And it's trying to get back up and over this resistance point, and if it can crack the cloud here, then it has a nice ramp here, and then another one out here. So it has potential to get back above 20, so we're in good shape as long as the markets can overcome their overhead resistance in the gold and the silver space. GDXJ, looking at these gold miners. Gold miners are really trying to stage a comeback too. All it needs to do is close above 33.23 this week, and again, it can hit its overhead resistance. And a close above it would be even ideal. That'd be the most ideal. So we still have a way to go yet in the precious metal space. And as the gold and silver prices continue to gain ground, it will take the mining sector with it. So things are looking good here. And this is all happening on the back of the US dollar. And you can see that here. And this, again, keep in mind, is a weekly chart. And we're gaining some downside momentum again now. As you can see here, we did touch that 95 handle. And right now, you're in free fall. There's no more support down here to speak of. But I want to point something out here, too. Even though the dollar is sliding, I just want to point out, remember what I told you with this dollar. This is a controlled demolition of the dollar. Therefore, technically speaking, from a charting perspective and from a cycle perspective, this is still very, very strong. This is still a strong dollar. Make no mistakes about it. If you recall, if you go back over the past several years, those of you who've been with me the longest, you know, and remember the time where I showed you when the dollar was at 77, remember that? And that 77 formed a base over a long time, and then when the market was able to base out, then it moved 10 more basis points up to 88, and we stayed around the 88 level for a minute. I think we even got low as 84, 82-ish, and then it jumped again and finally broke through the longer-term monthly resistance point, which was around that 90 threshold, and then we finally did that. So this market still has a whole lot of wiggle room between 96, where it's at now, and back to that 88 level, that old resistance, which is now acting as a strong support. So this is still strong, all right? So as long as the dollar can stay above 90 overall, that's still strong. Regardless of how you look at it overall, we understand the macroeconomics of everything, but we're just talking from a trading standpoint now. 90 plus for this dollar is strong. It's still bullish in the super cycle of things. All right, a dip below that, and now we're in crash and collapse territory as far as price action goes, and looking at the historical price action for this particular market. Another thing I wanted to show you is these bonds. Now, the bonds finally gave up that momentum that we were looking at when it got all the way up to 157. All right, so we topped out at the 157 mark, and now it's pulling back on this weekly. Still has some support right around the purple line here. 153.18 is all that's needed on a close this week to carry over some more momentum into next week. Now we're doing scenario 1, which is to try to enter the cloud up here, back here. It's going to try to do it. If it can't do it, we still got another week or two to get in here. If it can't do it and we get from here to the right, then that other scenario I talked about is going to pull prices down, and that opens the floodgates for the Fed to raise rates, you know, as many more times as they feel like it, without it having any negative ramifications. Once we get above the Kumo cloud, though, all bets are off. They can't do it without having dire ramifications. So bond prices, they need, at the end of the day, believe it or not, they need these bond prices high. They don't care about raising rates. That's a political thing. They need the bond prices to remain high, all right? And there are multiple reasons for that. One of the biggest reasons they need bond prices to remain high is because of this incredible, my mind just took a freeze. The baby boom generation. Remember, they have, just ridiculous amounts of money tied up in bonds, all right, because they need that, because they're entering into the retirement age. The biggest retirement generation, is aging, and they're the ones that stand to lose the most in a crashing bond market. So these bond prices have been held artificially high, believe it or not, because that's what the Fed needs to do. Remember the bond buyback program they had? That hasn't stopped. They're still propping this market up. So just want to throw that out there to you. We stand more to lose than the gain by letting bond prices get too low. So they're doing this square dance with the dollar and bonds, and they have to try to find some sort of equilibrium, or all heck breaks loose, and that, within the economy, and they don't want that. All right, looking at your oil's trying to stage a reversal comeback. Excuse me. We already took out the pointer here, so for all intents and purposes, the washout's already been done, and it can rally here, and it can get back up to this trend line up here at this 48 level. So this is going to be an interesting trade to watch and see how it manifests. We are still in the Kumo cloud of death. We can still fall below the cloud, rally outside the cloud only to come back down, and we still have just this long period ahead of us here. Anything goes. As long as we're inside the cloud, anything goes. So we'll be watching this to really see, what can manifest itself over the next few days. But so far, at the end of the day, volatility is starting to go down in the stock market. Not a whole lot happening. It's just one of those things where we need to really we can't go to sleep, all right? It's not all good. If you look at the XIV, it's still strong. It's still showing you that the stock market in general is stable with mad rampage coming up. If you look at the NASDAQ 100 by way of the QQQ, it's saying something else. It's looking like it's breaking down. It's topping out. This is, so we can't give up on the NASDAQ, because back here we broke out again too. So I don't know, but you can't ignore stuff like that. We broke out back here, all right, and we broke out again here. Doesn't mean it's going to keep being able to do it. So we gotta watch these pullbacks to see if the next one's going to be strong enough to break out again, or we're going to roll over at some point. The ramp, though, makes me think that there's no real significant pullback coming. We just got these little breaks, these little breathers. But that the next run is on the way, especially with XIV looking as strong as it's looking. So that being said, do yourself a favor, come on over to PulseWaveTrading.com, learn how to trade these markets, learn how you can follow the cryptocurrencies, know when to take profit in your portfolios and shift money to something that's moving. We track the crypto space, as you've seen. We track gold and silver stocks, all the mining companies, you name it, we track it. Even the weed stocks, we got it all. We track everything. We trade all exchanges, all markets, all countries. And that's what the weekly pulse wave price triggers can do for you. Come see what the talk is all about. PulseWaveTrading.com. And educate yourself in the Learning Academy. Learn what the markets themselves teach people every day that they don't get the lesson. You can come and you can learn that lesson without getting your head blown off. All right, don't let these markets scare you or rip your head off. Come learn how to trade them and navigate them correctly. PulseWaveTrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.